Hello and welcome to Earnings Echo. We put together the most important information about Nvidia.
Let's get right into the Q4 fiscal year 2026 results. The headline numbers are, they're large, but the momentum is the real story here.
Right. Usually the law of large numbers acts as a gravity well for companies this size,
Growth rates typically compress.
as the denominator gets bigger. But Nvidia is accelerating away from that trend.
The data definitely supports that. They reported record revenue of $68.1 billion.
Up 73% year over year.
Correct. And GAAP EPS came in at $1.76. But back to your point on acceleration, the guidance is the critical metric. They are forecasting $78 billion for Q1 fiscal 27.
Plus or minus 2%, which implies a sequential revenue jump of roughly $10 billion in a single quarter.
It's massive.
Just for context, you are effectively adding a Fortune 500 company to the top line every 3 months.
Exactly. It puts the annual revenue run rate on track to exceed $300 billion if the pace holds. Now, breaking down the drivers, data center remains the core engine at $62.3 billion.
Up 75%. But the composition of that data center revenue is shifting in a way that signals a change in customer behavior.
We aren't just seeing uniform growth.
Right.
The mix is the key insight. While compute revenue, the GPUs themselves, grew 58%, networking revenue just exploded.
Hit $11 billion.
$11 billion, up a massive 263% year over year.
That 263% validates the thesis that customers have stopped buying individual chips. They've started buying the factory.
Driven by NVLink and InfiniBand adoption.
Because you don't need that level of networking spend unless you are stitching together massive, singular computing units.
Precisely. They are selling the whole system now. And despite this hardware ramp, profitability remains really robust. Non-GAAP gross margin actually improved to 75.2%.
Aided by lower inventory provisions.
And the Blackwell platform's cost structure.
Let's briefly touch on the other segments before we move to the outlook. Gaming is up 47% year over year to $3.7 billion.
Though down sequentially due to inventory timing. Professional visualization also saw a significant jump, up 159% to $1.3 billion.
Which is largely due to enterprise demand for Blackwell workstations. Now, moving to the earnings call, the management tone was highly specific. Jensen Huang focused heavily on the agentic AI inflection point.
This represents the narrative pivot from training models to acting agents.
And the roadmap is positioned to support exactly that. They highlighted the Vera Rubin platform and Blackwell Ultra.
Claiming Ultra delivers 50x better performance specifically for agentic AI workloads. Cloud providers like AWS, Azure, and Google are already preparing for Rubin.
However, the outlook wasn't without caveats. There are two specific constraints you need to model.
First is supply. They expect constraints to be a headwind for gaming in Q1. Second is geopolitical. The Q1 outlook assumes zero data center compute revenue from China.
Zero. That is a highly conservative baseline.
They aren't counting on that revenue stream at all.
Which essentially removes the regulatory risk variable from your short-term modeling.
Exactly. There is also a major accounting change you need to track. Starting Q1 FY27, Nvidia will include stock-based compensation, or SBC, in their non-GAAP results.
That's a significant deviation from standard tech reporting, where SBC is usually stripped out.
It increases transparency, but it definitely complicates the year-over-year comparisons. For Q1, that represents roughly $1.9 billion in expense being added back into the calculation.
So if EPS growth looks artificially compressed next quarter, that accounting shift is likely the reason, not operational weakness.
Correct.
So the echo you should take away from this report is clear. The infrastructure build-out is evolving from component accumulation to system-level scaling to support agentic AI.
And the explosion in networking revenue is your leading indicator of that shift. We are moving toward the data center as the single unit of compute.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information. It does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.